Let's bring in Mark Zandi. He's the chief economist at Moody's Analytics. And Mark, what do you think to the question Steve just posed? Is this overhang from the trade talks? Is this early concern about coronavirus?
It's not the virus. This is way too early. The survey is based on a survey done that includes the 12th of February. And the virus was out there, but it was not a big deal. It was on our radar screen. That's trade war. Trade war damage was quite significant, continues to linger. This number, just a point of interest, is also juiced by weather. We had a really strong number in January that was weather-related. This was also juiced by weather. You can see in leisure, hospitality, construction. So underlying job growth is probably somewhere between 125 and 150K per month.
Have you seen numbers already that would reflect coronavirus? Like, how recently of numbers have you been able to get a hold of?
No, I haven't seen anything to indicate that there's any impact on the labor market as of this point in time. I'd expect to see it in the UI claims, if we're going to see initial claims for unemployment insurance. But I have not, we'll have to see, but I haven't seen it yet. No, nothing has shown up. Right, you're hearing anecdotes, in some of the surveys, PMI surveys, people talking about, what the impact might be, but it's just anecdotal.
Becky, the one report we've had, the ISM manufacturing report, showed a big decline in imports and a smaller decline in exports. I suspect
big decline in imports may be just because things weren't getting shipped from China, where it had a huge impact already there.
Right. I guess I question a little bit understating that, in that the knock-on effect of that is twofold. One is that consumers can't buy and retailers can't sell stuff they don't have.
Right.
And producers in the United States, many of whom rely upon products from China, can't sell stuff they can't make. So it's bad that it's not coming in the ports. That actually ends up, in a weird way, increasing GDP. Where you take it away is on the back end, on consumption, perhaps, and on manufacturing.
We're going to get much weaker job numbers going forward, into March, April, May. Part of it's just weather payback, because we got all the strong weather stuff in January, February. It's all coming out. Just so, even without the virus, we'd get weak numbers. And now with the virus, we're going to get much weaker numbers. It's just a matter of time. I mean, China still is operating at a very low level. No indication that's really coming back to any significant degree. So this is going to be significant.
We've had a running conversation about how the numbers that we're getting, even though they're outdated and don't reflect any of the things that are happening, are still important, because you need to know what level you are starting from, how much cushion you have to kind of get knocked around by coronavirus fears or other situations. How would you assess the state of things before we try and pile coronavirus on top of it?
Fairly adequate. I mean, 125, 150 is consistent with stable unemployment, right? That's potential growth. That's 2% GDP growth. That's what we've been getting now for a year. So if you see anything that goes south of that, particularly if it goes south of 100K, unemployment will start to rise. We'll get the unemployment insurance claims will rise, unemployment will rise. That is the fodder for recession. That's why recession risks are as high as are. That's why economists are saying probability of recession is close to even, because they understand that once you go below potential, unemployment starts to rise. That's the foundation for a recession.
Mark, very quickly, our CNBC Fed survey has an average impact on GDP of 0.6% this year, and only a small bounce back of 0.1% next year from the coronavirus. Could you quickly give us your numbers you have running?
Yeah, 0.6 is about right. I mean, as a baseline, kind of.
Right. In other words, it would have been 0.6 higher if not.
Yeah, it'll come back more than that, though. We won't get it all back.
That makes more sense.
A lot of these people who aren't going to take that trip, so we're not going to get it all back, but we're going to get a fair amount of the growth back.
Stronger bounce back then.
Yeah. I mean, I would be surprised, if we don't get some bounce back after this fades away. But here's one thing I will say. Economists, like everybody else, have a really hard time saying over 50% probability of recession. I assure you, almost every economist out there is thinking over 50% probability.